they will give us a QCEW report on jobs from April of 2024 all the way through to this past March of 25. Okay. And the articles I've been reading is saying there'll be no less than 450,000 jobs erased.
Expanding our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Ponte Vedra, Florida. I'm at the Blend Forum. Blend is our industry's biggest and most used point of sale, and having a great conference here. They have a bunch of sessions tomorrow. I'll give you a quick peek inside the festivities over here, and then I'll get into some of the meat and data of the weeks. It's actually a very important week. So we're at Pete and Alice's pub inside this Marriott right there. And yeah, it's this great event, good conference, good people, a lot of executives. It is raining, so I can't really, there you go, it's like coming down. So I can't really get out there. So I'm going to be super annoying for all these people on this patio. Okay, so labor over inflation, right? Inflation reports coming out this week. Wednesday is PPI, Producer Price Index, and the CPI comes out on Thursday. Now, what will be interesting is, let's say it comes in hot or as expected, 0.3, and we're all like, okay, inflation's still not at 2% and rising, and everyone's going to talk about inflation. So if the 10-year yield, which was at 4.04 today, 4.04, rates are great. Like, rates are absolutely great. Like, I shouldn't even be doing this video. I should be on the phones trying to find loans. But, if inflation's hot, what you'll see the bond market do potentially this week is go up and show us what the upper end of the range will be. So we've had lower highs on the 10-year Treasury for a while now. We've gone from like 4.99%, 4.83, 4.5, 4.38. So now, what was the floor, okay, at 420, the Elon line, as I called it, because, him and Joe Rogan, we couldn't get below that 420 line for months and months and months. And now we're demonstrably through that 420 line. Will that floor of support become resistance? So let's just say inflation runs hot and the 10-year Treasury starts to go up. Where it stops, okay, because of inflation, will it be 420? I don't know, but that's something to look at. But I still think the labor issue is a much bigger problem. And tomorrow is the QCEW, a very little talked about report. It's called the Quarterly Census Report on Employment and Wages. So basically, employers like us, we have to report every quarter, and we have to say, like, here's our employee count. Well, the Bureau of Labor Statistics gathers that data, and tomorrow they will give us a QCEW report on jobs from April of 2024 all the way through to this past March of 25. Okay. And the articles I've been reading is saying there'll be no less than 450,000 jobs erased from all those first Friday of the month BLS jobs reports. Okay. So could be as high as 650,000. Remember last year we saw a reduction of 880,000 jobs. So, what would have happened if every Friday, first Friday of the month, you had way less jobs reported if those quarterly reports, that data was collected much more quickly? I mean, why do we have to wait for tomorrow to get data from April of 2024? Anyway, so yeah, there's a lot less jobs that are created and eliminated by the BLS because of actual data, not birth-death ratio from the establishment survey. Remember, when establishment survey goes to employers and then they have this gimmicky ratio birth debt. It's not a demographic thing. It's like how many companies are open, births, and how many companies are closed. And for the last God knows how long, they've been showing net company openings. But we all know that's not the case, especially with rates being as high as they are, tariffs actually impacting small business, and of course, jobs being lost. So tomorrow's going to be another step in the reckoning of labor being much more of a driver than hot inflation. So if you see someone out there going, "Oh, we're not the 2% target, we're not 2," okay, great, we're not. We have jobs being lost. A job loss spiral can go quickly and be ferocious. So people are not looking for jobs. They are not feeling confident about go out there and finding another job. Jobs are being lost. And there's nothing more deflationary than when your income goes to zero. It's not good for our economy. So I won't harp on that too much. But there was one really interesting insight. So after every first Friday of the month last week, there's a podcast I like to watch, Kathy Wood, the chief investment officer of ARK Invest. And she goes through all these charts. It's a really great podcast. It's one of my don't misses. And she talked about labor participation versus the M2 money supply. One of the reasons why the Fed has to cut, regardless of inflation, is our money supply is not growing enough to foster labor participation. When there are less jobs to go get and people are losing jobs and it's harder to find jobs and less people are quitting, the participation rate goes down. And so we want people to think they can find a job. And by the way, don't get me started on how many part-time jobs were created in the last jobs report versus full-time job report. Okay, let's talk about the trigger lead legislation. There's only one thing to say here. There are less people calling triggers. That's it. That's the point. So there were a lot of them. Now there's a whole lot less. And that is it. Not to mention the borrower experience. Servicers always had triggers. You always got to compete with them. Who cares? If they have less competition, you have less competition, and you always competed with the servicer. So let's get that negativity out of here. It's a good thing the trigger lead legislation passed. There are less people with better pricing than you that are buying a trigger, calling your client or the servicer's client. So go get your opt-in, get your digital marketing game on point, have a good opt-in, pull your borrowers into the funnel, and call them and drip on them. That's it. And you don't need to do it with the trigger lead. This was a huge win. So thank you to all the organizations that had a part to do with it. A big, big deal. Anyone that says otherwise is just speaking out of fear. Thank you so much for the NBA, NAM, Broker Action Coalition, everybody. They really crushed it on this one. So thank you. Look, this labor report is a big deal tomorrow. So we'll take a look at that. And CPI, PPI out this week. And that's it. You guys have a good one. It's still raining. My hair got frizzy just on this video from all the humidity. Don't miss the humidity. I lived in Fort Lauderdale for 13 years. Cheers. Hey, it's KP coming to you live from Newport Beach. This is the very end of a PTA event. It's for the kids, as they say. So, first of all, it's 9/11. Never forget. The worst domestic terrorist attack since Pearl Harbor on our country. And, God, I can't believe it's 24 years ago. And of course, yesterday, you know, I've been thinking of like a way to say this about a political assassination. Like these posts that I do, I try not to be political. And, so I'm a big TV guy. I don't watch the news, and I'm referencing Charlie Kirk, and I'm not deep into politics. I don't follow content out there about all the riffraff that goes on and the back and forth in politics, and I think some of us on this LinkedIn platform are like that, but what I love about our community is that we can have discussions and debate and not getting to our own feelings. And so, we've got Yom Kippur that's starting, and I saw a Jewish rabbi speak yesterday and said that, if you're getting upset or angry or emotional, just call it a day and just put the phone down and go back and reset and come back tomorrow. Just, apologize for the emotion that is hard to control amongst all of us. And so nobody deserves to die in this country for whatever their views are or their approach or how they handle things. And, let's keep discussing and talk about hard topics. So let me dial it back to just an easy topic, the mortgage business. It's gotten easier right now for us. Rates are low, things are good. Our economy is doing okay. Labor's obviously weakening, and rates are giving us a nice tailwind, and we haven't had one like that in a while, and it feels good. Um, but when you zoom back out, you see someone lose their life over political discourse. It makes you think that, like, gosh, we're doing the American dream and we're doing loans, but someone lost their life this week, and obviously that's not the path. So for us in mortgage, let's we're serving communities, we're building communities, we're helping people build generational wealth, and you know what was pretty enlightening and positive is that the CPI inflation today was actually pretty high. It was hot, and is it transitory? Are the reasons that CPI inflation went up uh, enough to derail the rates being lower? What was interesting about that today is that rates improved. Rates generally got better. I mean, we have a 4.02 10-year yield. And so even with hot inflation, the smartest people on Wall Street, the bond traders, are looking through that. And they think the bigger problem is obviously labor weakening. 911,000 jobs were wiped off the map 2 days ago with the QCEW. I think on my last video, I mentioned that 450,000 jobs was the minimum. And this is 2 years of jobs being wiped out. So what happens is, like, small businesses, which are 55% of employers in America, we put quarterly um, reports in, and we report, these are our employer insurance numbers. These are who's working in our companies. It takes time to collect that data, and then it gets recycled back to the Bureau of Labor Statistics that puts out the first jobs report on the first Friday of every month. And so when they collect that data, they walk it back. So we're like 2 years in with 880,000 and now 911,000 jobs being wiped out. So that is April of 24, April 1st through March 31st of 25. So 147,000 jobs were created in that time period on average, and that's less than half that. But the unemployment rate doesn't go up. And Alex Pell from Mizuho, gosh, you guys got to follow Mizuho. Their data is unbelievable. They have some incredible daily data they put out. And I asked Alex, I said, hey, how come this doesn't impact the unemployment rate? 911,000 jobs is a big deal. But the unemployment rate is like GDP, it's spending, it's employment, it's a lot of things. And it actually doesn't impact the unemployment rate, which is such a big data point that the Fed watches. So next week, they have their meeting, and I believe it's the 18th, and they're going to have all this data come out, and they're going to talk about, excuse me, 17th, and they're going to talk about um, the curve, okay? So the dot plot comes out every other um, Fed meeting. So every 12 weeks, they meet every 6 weeks, but every 12 weeks, they put the summary of economic projections, the dot plot. And they're going to say, here's where we think GDP and unemployment rate and the Fed rate, the Fed funds rate, and all these data points. They're going to put it on a dot plot, and they're going to coalesce as a team and come up with what they think our economy is doing. And that, I think, has the potential to move markets next week. A 25 basis point cut by the Fed is baked in. They're not going to do 50 because it'll look like they're panicking because labor is going down, and they don't want to do that. But they may go 25, 25, 25 each of the next 3 meetings. But the dot plot is a big deal. It gives them all cover as a group to kind of decide where they think things are going. So we're going to watch that data next week. It does have a chance, like if before next week the dot plot says, hey, we have this many cuts in this short amount of time, but they may split the baby and say, well, inflation's high, like today, and we have PCE reports and day reports. And if they think inflation's high, but labor is weak, they may extend out the curve next week. I don't know if they're going to do that, but it does have a chance to move markets. I'm not a financial advisor. I'm not responsible for your losses, only profits, but they could be a buy on the rumor, sell in the news type moment where once the news comes out of how the Fed thinks about things, when they say, we may not do as many cuts through 26 as we said before because we're still worried about inflation. Although, generally for decades, like 30, 40, 50 years, tariff inflation is seen as temporary. So the job market is obviously softening and is much more important than a hot CPI report this morning. So PPI was pretty weak yesterday, is outright deflationary and went down by a negative 0.1%. And that's the input prices. And that will roll into the PCE report that comes out at the end of the month. So lots going on. Obviously, President Trump is trying to fire Lisa Cook, and that's being challenged in court. So she may have her job for next week's Fed meeting. He's being challenged by the courts. Like, obviously, these things haven't made their way to the Supreme Court, which is stacked for the conservatives. So, we kind of have a thought of where that will go. But his tariff power is being challenged in court, which the bond market doesn't like, because the bond market actually likes $30 billion a month in tariff revenue being used to pay down the debt. That's good for long-term bond rates, 30-year long bonds, which doesn't necessarily impact short-term mortgage rates. So we're in a good spot, as a rate environment, and every labor report that comes out is now the top tier data point. So hug your kids. Tell them this is a great big world. There is an abundance of beautiful, amazing people that overwhelmingly do the right thing. Even if every now and then a single crazy person in a great big world can rock our foundation. And let's go help put people in houses. Let's do our thing. Let's lock in, and let's be good human beings. Have a wonderful weekend. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.